Ever wondered why a good credit score matters so much? Well, let's dive right in. A good credit score is your passport to favorable interest rates on loans and credit cards. It's like a financial report card that lenders use to gauge your credit worthiness. When you have a high credit score, lenders see you as a low-risk borrower, which can open up doors to lower interest rates and better terms. But it's not just about loans and credit cards. A good credit score can also be a key factor in securing a lease on a new apartment or even landing a job. It's an essential part of your financial stability and independence. It's your reputation in the financial world that can affect many aspects of your life. So a good credit score isn't just a number, it's a gateway to financial freedom. The first step to improving your credit score is knowing where you stand. So let's arm ourselves with knowledge by obtaining a credit report. You're entitled to one free report annually from each of the major credit bureaus, namely Equifax, Experian, and TransUnion. But why is this important, you ask? Well, these reports provide a comprehensive view of your credit history, which is the bedrock of your credit score. Now, don't just stash away these reports in your drawer. It's vital to thoroughly review them. Keep an eye out for any errors or discrepancies. These could range from incorrect personal information to accounts that don't belong to you, or even errors in your payment history. Identifying and rectifying these inaccuracies is crucial, as they could be unfairly pulling your credit score down. Remember, knowledge is the first step towards improvement. So get your credit report, review it meticulously, and start your journey towards a healthier credit score. Now that you have your credit report, what should you do next? Let's dive into that. First, it's crucial to correct any errors you might have spotted. Inaccuracies can range from incorrect personal information to accounts that aren't yours. If you find an error, don't panic. The credit bureaus have a process in place to handle disputes. Here's a quick rundown. Begin by writing a letter to the credit bureau explaining what you believe is incorrect. Be as specific as possible, and include copies of documents that support your dispute. After the bureau receives your letter, they'll investigate the items in question. This process typically takes about 30 days. If the information provider determines that the disputed information is indeed inaccurate, they must notify all 3 nationwide credit bureaus so they can correct the information in your file. But remember, not all errors are resolved in our favor. Sometimes the information provider may confirm that the information is accurate and it stays on your report. In such cases, you have the right to add a statement of dispute to your credit report. Now, let's move on to another crucial aspect of credit management: paying your bills on time. Timely payments significantly affect your credit score. In fact, payment history accounts for approximately 35% of your FICO score. So, every late payment can hurt your credit score. But life is busy and we can easily forget due dates. Here's a solution: set up reminders or automatic payments. Most banks offer payment reminders through their online banking portals. You can also choose to have your bills automatically paid from your bank account on the due date. This way, you can avoid late payments, which not only incur late fees, but can also negatively affect your credit score. Remember, every on-time payment adds positive information to your credit report, which can help to improve your credit score over time. Timely payments can make a big difference. Be punctual. Credit card balances and debts can be daunting, but they can be managed. When it comes to managing your credit card balances, there's a golden rule to remember. Aim to keep your balances below 30% of your total credit limit. This is because your credit utilization rate, or the percentage of your available credit that you're using, plays a significant role in your credit score. High credit utilization can be a red flag to lenders, indicating that you might be over-reliant on credit. So if your credit limit is, say, $10,000, try to keep your balance at $3,000 or less. Now let's talk about creating a debt repayment plan. This is a strategy for paying down your existing debts, and it's essential for managing your finances. Start by making a list of all your debts, including credit cards, loans, and any other outstanding obligations. Note down the balance, interest rate, and minimum payment for each. Once you've got your list, there are a couple of strategies you can consider. The first is the avalanche method, where you prioritize paying off the debts with the highest interest rates first. By doing this, you're targeting the debts that are growing the fastest. The second strategy is the snowball method. Here you focus on paying off the smallest debts first, which can give you a sense of accomplishment and motivate you to tackle the larger ones. With either method, it's crucial to continue making at least the minimum payments on all your debts to avoid late fees and potential damage to your credit score. Debt can feel overwhelming, but remember, you're in control. Take it one step at a time, stay consistent with your payments, and slowly but surely you'll see your balances decrease. And remember, if you're struggling, don't hesitate to reach out to a credit counselor or financial advisor. They can provide guidance and help you devise a plan tailored to your situation. Manage your debts wisely. Every payment counts. Managing your credit accounts effectively is crucial for a good credit score. Every time you apply for a new credit account, the lender performs what's called a hard inquiry to check your creditworthiness. While a single inquiry might not make a huge difference, multiple inquiries in a short span can put a dent in your credit score. It might also signal to lenders that you're desperate for credit, making them wary. So try to limit the number of new credit accounts you open. Now, let's talk about old accounts. You might think that closing an old or unused credit account is a good idea, but hold on. The length of your credit history plays a significant role in your credit score. Keeping old accounts open, even if you're not actively using them, can help demonstrate a longer credit history and add to your total available credit, thereby lowering your credit utilization ratio. Of course, this doesn't mean you should keep accounts open at all costs. If an old account comes with hefty fees, for instance, it might be more prudent to close it. Adding a little variety to your credit can also give your credit score a boost. This is called credit mix. Credit scoring models look favorably upon consumers who can handle different types of credit responsibly. These might include credit cards, auto loans, mortgages, and student loans. But remember, while diversifying your credit mix can help, it's important not to take on debt you can't afford just to vary your credit types. So the key takeaways for effective credit account management are: limit new credit applications, keep old accounts open where it makes sense, and diversify your credit mix responsibly. Remember, it's not just about having credit, it's about managing it effectively. There are other strategies too to boost that credit score a little more. Consider becoming an authorized user on someone else's credit card. If you have a friend or family member with a solid credit history who trusts you, this could be a great strategy. As an authorized user, you'll benefit from their positive payment history, which can help improve your own credit score. It's a win-win situation, provided you both handle the arrangement responsibly. Now, let's talk about negotiating. If you're having a hard time making payments, don't hesitate to reach out to your creditors. Many creditors are willing to work with you to create a modified payment plan that fits your budget. Remember, it's in their best interest to help you repay what you owe, so don't be afraid to ask for help. Next on the list is settling outstanding debts. If you have accounts and collections, negotiate with the collection agency. Often they're willing to settle for less than the full amount owed, but always get the agreement in writing before making any payments to protect yourself. If you're just starting out or rebuilding credit, consider getting a secured credit card. These cards require a security deposit which sets your credit limit. By making regular payments on a secured card, you can demonstrate responsible credit use and improve your credit score. Last but certainly not least is education. The more you understand about credit scores and how they're calculated, the better decisions you can make to improve yours. Knowledge is power, after all. Learn about the factors that influence credit scores, like payment history, credit utilization, and the length of credit history. This will help you make informed decisions and develop effective strategies for boosting your score. Every strategy counts when it comes to improving your credit score. So whether you're becoming an authorized user, negotiating with creditors, settling debts, using secured cards, or simply educating yourself, remember that each step brings you closer to a healthier credit profile. Finally, remember, this journey requires patience and consistency. You see, there's no magic wand for boosting your credit score overnight. It's a process that demands time, just like nurturing a seed into a blossoming tree. It's about consistently making smart financial choices day in and day out and sticking to your credit improvement strategies. Think of it as a marathon, not a sprint. You don't have to be perfect, but you do have to be persistent. Timely bill payments, managing your debts, maintaining a healthy credit mix. These aren't one-time tasks, but ongoing commitments. And along the way, don't forget to monitor your progress. Regular check-ins with your credit report can not only keep you informed, but also motivate you by showing you the fruits of your discipline and diligence. So, as we wrap up, let's echo this mantra: stay patient, stay committed, and watch your credit score grow.